Good afternoon. I gotta check if this is working. One second. Good afternoon. I gotta check if this is working. One second. Okay. All good. I was checking if the sound's working. I'm streaming it through my laptop, so this is the first time doing this, so I'm making sure it's all good. Anyways, hello. Hello everybody. Hope the sound's okay. Hope the sound is not too loud. My first time doing this, it's gonna get better. Quality isn't gonna get nothing but better. So let's stick with it. Anyways, listen, we are live streaming gold today. So where is XAU? I started a $20,000 account, and we are gonna be trading this on live stream. No, where's my chart? No, this is not it. Yep, there we go. Okay. First of all, why am I streaming? I don't like people online who are telling you how to trade, telling you what to do, giving you strategies, but at the same time, they're not trading live. I'm a skateboarder. I love skating. I've always done it. Now imagine me as a skateboarder. I tell you, hey, this is how you skate. This is how to do a kickflip. Oh no, if you want to get sponsored, this is what you gotta do. Nah, if you want to jump down the stairs and tray flip the stairs, this is what you gotta do. And I'm giving you all this advice, and you take some, you leave some. But I don't show you that I skate. You don't see me skate. You don't have videos of me skating. All you do is have videos of me telling you how to skate. Now, for me, where's the credibility? It's not there. If somebody's gonna tell me how to do something, I want them to give me a form of credibility. Whether it's through live streams, whether it's through live logins, whether it's through having a Discord and giving your trades out. A sense where you have your credibility and reputation on the line, so you can tell people, like, hey, this is what I do and I take it seriously. I do know how to do it because I'll do it right in front of you. There are thousands, hundreds of people out there selling courses with free information, with information that you can find for free. I'm not saying that's wrong, but just point them to the direction of somebody who made it for free, who's already done the job. Now, great examples of people who do this are Umar Ashraf. He trades, he does live logins. Don Vo trades live. Raja Banks trades live. There's this other trader, he wears a ski mask. I forgot his name, but he trades live. And I respect these people because they're putting their money on the line with their reputation, enjoying what they do. And these are the people who I would listen to if I were just starting out trading. So just to set an example, my first time online displaying actually what I do, I've been trading for around 5-6 years, taking it seriously trading for around 8 years, since I was around 16, but taking it seriously for 4 years. I didn't realize you can make a career out of this. I was never big on social media. I never saw people, hedge fund manager, this investment banker, technical strategist. I'm like, what is this? I thought people just trade to make a few thousand. Then I started noticing, wait, no, you can actually make a career out of this. This was during COVID. And I realized, yeah, this is what I want to do. This is what I like. I've always loved this, and I realized now I can take it seriously. And ever since I've been taking it seriously, I've been doing well. I've been doing well. So, what do we do now? Just put my online presence. I enjoy what I do. I love what I do. So, long story short, this is a 20K account we started. I've taken some trades already. I took one little trade today on the Asian session, took it a little short over here. We're going to be starting it at 21,686. I will be trading gold only on this account, maybe some S&P and Nasdaq during New York session, but this will be restricted to Asian session, London session mainly, and sometimes New York session if we do get through. But yeah, if you can see up on the top, our session bias is to rise and fill 2035 to 2040. So that's where we are now. So I'm looking to fill this gap. So we got this. Listen, you can sit there and call things patterns, ascending wedge, whatever megaphone type pattern this is. I don't care. What I care about is there a pattern. Yes, there is a pattern. We go down, we bounce off this region. So we can say, okay, let's put a line here and see if it's respected in the future. We go up, we go down, then we bounce, we reject off of here and we start going down again. Now we put a line, we see, okay, let's see if this is going to be respectable in the future. If it's respected per price in the future. And here you notice it is. And listen, it's not going to be exact, but you're going to have zones of liquidity where this is going to drive your price, right? So around here is kind of respected. Here it broke and then it's still respected. So I'm recognizing that there is a pattern here. I want to follow the pattern. So there's two options, right? Either the pattern is consistent and we follow it and we take a short down here, or the pattern breaks and we continue going up, right? Because it's simple. Buy, sell, buy, sell, buy, sell. You want to go buy and you want to sell. So now our job as a trader today during the London session is to see if we're going to break 2040, which is where I'll put this horizontal line, this zone, or we're going to reject off of it and we can take some shorts down. But generally today I'm trying to see the price action off of this level to see how aggressive it is, if volume does come in and when it does come in, how is it influencing the price, and what decisions are traders taking at this level of price. Pretty much. So that's our game plan today. I always tell people trading is boring, it's not fun, especially when you really understand that this is hard, it's not easy at all. It's not easy at all, and it's a bunch of waiting. Once you recognize what trading is and how to think as a trader, you want to wait for the setups that you are comfortable with and you know you've seen happen in the past. And now your probability of that trade being profitable is much higher because you recognize these patterns. You use your intuition matched with your experience to tell you, hey, we're going to take this short. We're going to take this buy. Now this is it. I'm doing it here. I'm taking risk here. You can be the trader that says, oh, it's 50-50. I'm going to take risk anywhere. It's not my style. I want a higher probability of my trade going right. So pretty much we've had some winners and losers in this trade. Where it's a 500 leverage trading account. Very over leveraged. Yes, I understand. But this is a scalping account. Where like if I go look at the average pips on these trades, it's absolutely nothing. It's absolutely nothing. We're gonna be aiming for more, of course, but for now it's can't really figure it out right there. So the pips 2.9, 5.6, lose 7, lose 6, make 10, 7, 4. It's not big, but what I like to do when I'm starting an account is this one thing, and it's so important. Build a cushion. I want my bed full of pillows. So if I ever have a bad day, my bed can catch me and I can always feel good, you know? So we started at 20K. Here we made this 221, went to the 221, 20K, 221. Now all of a sudden, we're saying, okay, let's build it up, 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 build it up. We built it up, and now we have around 23K. Now we can take the longer pip trade. Now we can take the, hey, we're going for 30 pips, we're going for 20 pips, right? So pretty much, build that cushion first. I'm not trading any strategy or anything like that. I'm doing what I do. I'm not here to present a strategy to you. I'm here to present to you my credibility. I'm here to present to you that I am a trader and this is how I do it. This is for me only. I'm not putting these live streams out for other people. I'm putting these live streams out so others can say, okay, if I do want to see this guy's serious, he has tons of live streams done. Let me go see what he does. I'm trying to get 30 days of these live streams, in which then I will go private about it. But we'll figure it out then. I'm sure I'm going to keep live streaming every day. But yeah, so our plan for now is either we... Give me an arrow. Give me an arrow. Man, this is not a trading view arrow. So either we bounce here, we go up, we reject, we bounce, or we go up, we reject, and we go down. So we go up, we break out, we retest, and we keep going. Well, we'll see how price is there. You know, if we get some volume, we get a trade to up there. But for now, I'm just waiting. I'm holding my guns. because I have a very bullish bias today, in the sense of you would expect price to come down from this level if it is respecting the pattern, which is what we want to see, right? But is it gonna come back up and break? This right here tells me, hey, many buyers have this trend line sitting down. What am I gonna try to do? I'm gonna try to find it. I'm gonna try to go and buy with it. So they broke this pattern. It bought more than they expected. Now all of a sudden, what? I'm expecting, hey, is this gonna do the same thing? And if it does, is it gonna do it to the same level of intensity, or is gonna be more buying pressure coming in to take it up higher? And that's what price action is gonna tell us there. We're gonna see if the candles reject, if it makes any wicks like this, if the candle's body closes next to the other candle's body. So these are the little decisions, the little thoughts we're gonna take. So pretty much. 15 minutes probably my favorite interval, so we'll stick it to that. And for now, we be patient. There's nothing here. There's one viewer here, and it's me on my laptop. If you have any questions, ask. But not really. I'm putting this on. We're gonna grow this. We're gonna continue. We're gonna maintain it. And I'm just gonna take my trades. I'm not gonna sit here and talk. I don't expect anybody to sit here and watch this. But if somebody does want to come back and take a look at what I do, in the case that we do get a profitable trade, in the case that we lose a trade, they can come back to it and say, hey, how does this guy deal with losing a trade? How does this guy deal with winning a trade? How does he manage his winning trade? How does he manage a losing trade? How does he manage risk? What ways does he manage risk? Does he use a stop loss? Does he hedge? Does he lower position size? So this is what I expect. Is this guy serious? Is he actually a trader, or is he just talking? Nah, before I upload any videos, I will have consistent live streams of what I'm doing. If you catch a trade, we catch a trade. If we don't, we don't. If we lose, we lose. If we win, we win. This is part of the game, and this is what I'm here to do. I'm just here to do what I do always, but live. I ain't camera shy, so it's all cool. So for now, I'm gonna stay silent. If there's something I need to say, I will be thinking out loud. So you're all present to listen, but for now, I'm just gonna stay silent until I see something I like. Let's take a look at how price is responding to this gap. We had a gap in the market. Now, how is it responding to it? We're really consolidating around it. Now, when volume comes in, where is it going to go? Is it consolidating because it's going to reject, or is it building up a bunch of buy orders to finally shoot up to 2040? But let's see on the macro time frame. Let's actually see what is happening. This is that same box with the same gap. Let's just fine tune it. Alright. And this is one little scalp short I took, $120. Caught it here, limit order. Took it out here when I noticed the wicks were really up to were going to the upside. It was wicking up over here. I was like, next candle could possibly use this as support, so I just got it up. One trade per session. That's pretty much all I want. You know, if we find more, we find more. But yeah. I love it when the spread goes to 1. Shows me it's going to consolidate. Then when the spread starts becoming big, you have less orders. Then the orders come in. Then you get those big momentum candles. Those, what are they called? impulsive moves, impulsive candles. But yeah, this is us for now. Like, this is fun. If you have people sitting, talking, asking you questions, chilling with you, you're all in the same zone, you're all trading, you're all looking for trades. I can imagine waiting, looking at the charts. Starts becoming fun. You know? I'm never around people when I trade. Never. I like my silence, I like my little music, I like to do what I do. But if you got people around you watching, it's actually I can see why these streamers enjoy it. I'm super bullish for today. Just keep in mind that it did break above that gap. Let's see what happens and what it does from here. Our bias is to, oh, there's the arrow. Our bias is to head up there, see how price responds, possibly take a short, or possibly have an impulse candle to break above this channel like here, retest like here, but instead of breaking down, we break up, and depending on price action and how it responds to the level, we will know the most probable outcome. We will take the most probable outcome, because that's what you do as a trader. You identify patterns and you want probability to be in your favor. What has happened at this price before? Okay, dropped. So if this breaks, it's gonna break big. If it breaks the pattern, it's really gonna show the traders, hey, we broke the pattern. That way you can bring in all the orders, you can take the stops, you can have more volume in the market. When more volume is present in the market, market makers can make more money. This is what they do. We want to be in between them. We don't want to be part of the impulsive moves. We want to follow the trend. Okay. One thing I like to say is markets take the stairs up, but the elevator down. It will trickle, 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 trickle up, and then bang. That's why I prefer when we're in downtrends. I don't find shorts in uptrends. I'm not gonna say I don't. I took one right here, but I prefer. It was only 2 lots, which is what I wouldn't usually take. What I would do is take shorts in downtrends and take buys in uptrends. It's just, is the probability in my favor if I'm buying in an uptrend? There we go. Yes. In my favor if I'm selling a downtrend? There we go. What's more probable? Identify a little micro trend here, you know. Respected, respected, respected. So we can say this is a respected zone. Here, things aren't as smooth. We can draw horizontal resistance here. Right there. Wick, wick. If it does come down, we'll see how it respects it here. And we have the gap, which the volume is coming from. One thing you would say is, okay, you have a bullish bias, why aren't you taking a buy from here to here? Because exactly that reason. If I take a buy, the probability of it going higher than this is low. So why would I just risk money just to make this much? I would short here in hopes to take it down at this range. I would buy at this range in hopes to take it out at this range. But for me to just enter a trade, there's less people looking at, in terms of pattern recognition, there are less people at this zone who are going to look for buys. But price action will tell us that's of the contrary. So what we do look for is for price action to bring this up here, get some price action up to this side, 2040, and then we see how price responds. If it's weak, we short. If it's bullish, we wait for a break, retest, and we buy on the retest. Once again, we're only trying to catch, for now, 10 pips, 15 pips, build that cushion up to 23, 24, then start taking our, 100 pip moves, 70 pip moves. Because here this is not worth it for me. This is not a setup I like to see. So we do what we do best. We wait. Okay. Interesting. I thought my mic was muted if I did this. Turns out not. Testing. Interesting. I thought my mic was muted if I did this. Turns out not. Testing. Interesting. Okay. Well, it turns out not at all. Where's my audio coming from? Hold up. Okay. Well, it turns out not at all. Test. Where's my audio? 1. Test 2. Hold up. Okay. Test 1. Test 2. Listen, I have no idea. I don't even care anymore. I don't mind. There's nothing I don't want you guys to hear. It's food for thought. We're getting that push up. Let's just look at the high time frames for a bit. Let's just draw a level down for you. So, let's take a little trend line from here to here. Because if price does break out of this region, we can retest and then go up here. That's a decent move. That's 86. And we can take another decision here. Very possible gold heads up to this level, which is 2046. So far, I'm not liking any setup so far. So we'll see. We'll see how this changes. Okay, what does price do now? The first red candle we had in a bit. My guess. See how much is consolidated here. That means there's a lot of liquidity here. Now, is it gonna come down back to drive it up, or is it gonna come down and keep going down to our next level, which is this trend line? Or it just flips and keeps going? But we know our options. That's what we do as traders. We have to identify what are our options. Yes, price can either go up or down, but let's simplify it where simplicity reigns, that not complexity trespass. So our next level, to keep it simple, is if it does come down, we expect it to come here. Once it comes here, it can either bounce from here to continue up to here, or reject and go to this level. Then we can say, is it gonna bounce and then come back up to here, or is it gonna reject and then go down to this wick support? Then once it's here, is it gonna continue, or is it gonna drive back up into this level? So we're using our outcomes to keeping price in between those outcomes. So it either bounces here or goes up to this, because we have our options. See the 1 minute. Aggressive selling. Stairs up, elevator down. 1, 2, 3, 4, 5 candles, all in 1 minute. So half of this, 1, 2, 3, 4, 5, 4.5 candles, just taking out 1 minute. That's why I prefer shorting. It's just, my style is get your money in, get it out. I don't like holding my trades and, oh, I'm gonna wait for it to hit my take profit. Man, listen, I can read price action. If I think this is a better place or more probable place to take my money out because I think it will reverse, I'm taking my money out. I'm moving on to the next trade. There's no reason for me to sit there and say, oh, well, it didn't hit my take profit, I shouldn't take it out. La habibi, what's this? No. If you make money, take it. Make your money, bro, make it. Especially when you're trying to build a cushion. Also possible to take a little buy here, maybe not 10 lots, but 3 or 2, possibly 5, just depending on how it looks, but we will see. I just, once again, I just don't like this range just to buy, just to go up here, you know, to find some buys up here, because I know myself, I'm not just gonna hold it until it goes there. Maybe we'll get a wick up here and I'll just take it out, and I'll move on. Okay, next interesting zone locally. When I say locally, I mean really locally. Is this. I want to see if this is maintained. Maybe not draw a trend line, but a equidistant price channel. Like, you know, bounce. What's gonna happen? If it breaks, it's gonna be violent and we'll dump back down to, which is our target here, or we bounce. You see, that's like relative to the movement we had in the previous candle, that's violent. Relative to how the wicks were exactly on the trend line and how this just broke it, that's violent. Is it gonna do something like this over here, where we break out of the trend line for the first time and then we just still come back down? We have to see. So in that case, it would be you break and then you come back up, but you play between what you have. I have this support over here, I have this support over here, and I have this resistance over here. And now we're still trying to see what happens with this. This is what I have on my table, so I will eat what's on my table. I'm not gonna eat something that's not on my table. Give me the food, give me the loot. Okay, interesting. There's that violent price action we're talking about. Now, how is this gonna translate into coming to our zone? go to the 3 minutes. Let's just analyze what's happening in those candles. Cleaner candles. We have 3 candles right there. Okay, nice. I like this view. Just in case we do, I usually like to mark it in. See how this, because we had so much consolidation here. I'm trying to see how this is respected. And we dumped violently. When things go down, they come up quicker. When things go down fast, they come up quicker. When things go up fast, they come down quicker. That's the way I like to think. See this candle forming right here? This is maintained. We can find a possible buy to take up all this. So like here, you know, what was it? Still not clear. It's still just one candle. I want some more decent price action. It's just still based on how violently we dumped down from this trend line, this local level, we can give it another week. Unless it gives us an indication that it want to drive with volume and shows, hey, there are buyers present at this level, proving this consolidation is a buying, it's like a buying hotspot, right? It will keep going from there. And I'll prove that this is picking up buy side liquidity. You don't want to just make your decision off of one candle. It's not safe. No, there's no point in me muting this. Okay, you see how that picked up so quickly? Let's see what's going on there. Let's see how this keeps going. It just came down to this zone and wicked and went back up. Is he gonna do it again? If it does it again, that's a good sign for buys. If it doesn't, that's less information for us to utilize. Another wick right there. If we do break here, we want to identify that it's weak from this point, so we can enter short from this price if it is weak. And once it goes down, we'll see if it's respecting this or if it just breaks it, and we can take profit around this zone or this zone. But for now, we wait. There's nothing much we can do. But what we did get is a 15-minute close. Let's check that. Candle close bearish, right? I want to see this is gonna keep driving down. Remember those wicks we saw in the 1 minute? Let's see if we keep seeing those. Now this is something I like to see. Now if this is maintained, we're gonna have a reversal. We're gonna have a nice clean reversal, and this is someplace I would take risk in terms of buying, because we came down. What I can do here is enter a trade, and once it closes, the 1 minute closes above this range, and I enter a buy here, I can put my stop loss to entry, and just, if it wants to keep going through New York or the rest of London, let it. If it wants to hit my stop loss, let it. That's what we're trying to catch, if we do catch a buy here. I like how it tested here and it wicked above it, showing us that there is buying pressure in this zone, that this might be a little relief to the upside, little relief. We go down, then we continue up, but keeping in mind we still broke this and we're between our two zones, this and this. But still not really worth it. In fact, I don't think we're gonna come down here. Possible bear flag. Big just rejection at the same spot. So now we identify that this zone locally is super important. Price rejected here once, rejected here twice, rejected here a third time. The market likes to, and what I noticed, the market likes to work in 3s and 5s. If it doesn't break it on the 3rd, 4, and then 5 will be big. Or 1, 2, 3, 4. This didn't test, 5 will be big. So we'll see. But judging price action, just making a new consolidation zone. What if we're doing one of these again, but not as long, and we can head up to our bias, which is fill 2035 and 2040. We only filled 2030 up to 2036, 2037. So if we can catch a buy here, it does look good. Stop loss to entry, bang, or it breaks, we get some decent price action, we catch a short, stop loss to entry, and it either tests here and bounces and we take it out, or it tests here, wicks, breaks, and we just get some consolidation until we go down further. But now look, there's the 1, 2, 3, 4, 5, or is that, no, that's 1, 2, 3, 4. Beautiful break. Okay. Now, are we going to get a reversal? Uptrend? Are we going to continue into an uptrend, or are we going to break into a downtrend? Based on this, it's giving us high indication that, hey, this wants to continue. But we have to see if it breaks our trend line, right? But even though I still don't see any setup. What would I want to see? I want to see it at this level. I want to see how it responds here, because even if we do find buys here, it's going to be very volatile at this point. Traders recognize that this is a channel, this is a pattern. Many traders have this on their chart, and if they do have it on their chart, what does that mean? They're looking at it. They're going to take risk here. They're going to either close their buys or close their sells or enter buys, enter sells here. So we're trying to see how price responds over here. That's what I want to see. But taking a position in between here, even if I do, it definitely won't be my regular position size, which is 10 lots. Okay. This is one of the trades that I would have liked to catch here, but it didn't give that much indication other than this break. But that would have mean I would have entered here, because if I did enter here, I would have been able to put my stop loss to entry without getting stopped out by the spread and one volatile move, you know. But now we see how it responds to this. Let's keep it at the same level. Okay, clear rejection so far. Really aggressive. One candle closed, and then the next one opens here and just keeps driving down. Could this be a possible bear flag where it goes like this? No, from there to here. The way I like to size bear flags, I go to the top. So when it starts the consolidation zone, which is here, and then you take it from consolidation zone to down, which is exactly one standard deviation of this. So now, based on this information that we have now, with the rejection, with the possibility that this is a bear flag, we want to see how price is gonna respond over here. This level, it's a minor level now. It's a minor level, but it's still data, it's still information. But for now, I'm interested in here and in here. I'm interested in this for buys, to see if this is just, you know, stopping out some longs and then picking up liquidity here to keep driving back up to 2038, 2040. We'll see. You know, get a London session low and then drive up in New York. We'll see. Clear rejection, absolutely clear rejection. It didn't give me enough information to enter buys there. This could have happened here, this could have happened there. I would have wanted to see at least 3-4 green candles with big bodies. Minor level right here broken. Let's just go to the 3-minute for now. Okay. I have the support 1, 2. Doesn't care, just gonna drive through it. This is a price where you want to look for buys after a big move like this. People think, oh, I'm gonna look for sells. Scalps, I would find buys at this zone. And price action like this, not at this zone. No, I wouldn't find buys here. I'd find buys here. Like if we were to manage our risk here, buy 10 lots right at this, we have a stop under here, that's 1.6k. We take it back up to the high, that's around 5,000, like around 3,000 to 4,000 depending on how price is at this range, because we can't go up and reject the same. We don't want to be that position. If it goes up and it starts rejecting, we want to just get out, take our money, get out, move on to the next trade. That's just my style. See the 1 minute. I really want to see how price is responding here. I like this. I like this if this continues here. Because then we get a ABC, A, B, C. Catch the trade at the C wave. Once we cross this A, we can go up to the B. It's M to the B, M to the B. Okay. Yeah, possibly catch some buys here. You know what? Let's do it. Take it up here. Only 2 lots. Only 2 lots. I would never risk how much I would usually risk. And if this closes here, I'm putting stop loss to entry. And if this goes down here, I'll add more. Then if it goes under here, I'll manage risk. But yeah, pretty much. Pretty much. That was 2 lots, right? Yeah, that was 2 lots. Take it up at around here. Big wick. Okay, now if we see this close, 30 seconds, we'll just put our stop loss to entry and just leave it. If it takes it out, takes it out. If it doesn't, it doesn't. But it just did go down too much. I do have a bullish bias today. This support, this support, this support. We had big wicks up to here. This is telling me, hey, it's a nice place to take risk. If it doesn't work, no problem. We can, if it doesn't want to go down, we'll go down here. We'll see how it is over there. And once it goes there, we'll maybe take another buy. Possibly will take another buy. Very certain. And we'll manage risk. But yeah, pretty much for now, we're here and we're in this position. Okay, big volatility. Quick. Is it gonna break? Or is it gonna go up? Where's this? Top to bottom 24. This top, if this was the bottom 20, 24 would be around here. Yeah, pretty much. Just consolidating here. I'm very certain we're gonna get a big move now to whichever direction. But because we came down to this range after this massive local dump, I'm not gonna say this is massive, but relative to the rest of the price action, it is. And you come down here, pick up liquidity, go back up. We'll see. One minute closes above this zone, I am stop loss to entry. Down here, if it goes down here, I'm looking for more buys with a break even of here. If we do want to close it, we can close the break even here. All right. Decent so far. Want to see it challenge this wick. Now what I'm asking myself is, if it closes here, am I gonna put stop loss to entry, or if it closes above this wick, I'm gonna put stop loss to entry. I'm gonna see how this moves. If this makes a big wick up, I'm gonna put it to entry. If not, I'm gonna leave it. I won't put stop, because it can just come down, wick my order, and just, fly back up. It's not worth it for me. It's not worth it for me. Like there, if I put it to entry, it would have been out. Is it worth it? Nah, not at all. Yep, so pretty much. Bullish bias. The way we're managing this risk is if the 1 minute closes above here, now above these wicks, above these bodies, at these bodies, we'll see. We'll put stop loss to entry. If it goes down here to 2032, we will add more buys, and we're looking to take it out above here, 2035, around 2035. But yeah, big consolidation. So, and some really big wicks. So we're gonna have some volatility coming right now. Will this be a bear flag, a continuation down to here, or will this be a reversal so we can continue up here? Because if this is a reversal, we can find like a little inverse head. So it'll be our shoulders, be our head, come back up, make the left shoulder, break out to New York. So many possibilities, but for now, it's just let's see how it responds here. Getting a decent test to the downside. Wicks up. This line was our support from here, which was resistance. We broke out from. Are we gonna come down, retest it, which is what we're doing now, and climb back up? Or we're gonna climb down and is it gonna confirm a bear flag and we get our buys down here? So yeah, based on what we have, this trend line, this horizontal line, this where rejected from over here, and then we have this major trend line up here. This is the decision we're in right now, is to take buys and see what happens. Scalp. We're not aiming for big profits, we're aiming for a cushion. We're trying to build this account. We built it to 21,680. We're trying to get it to 23K, 24K. You're making a few hundred, 300, maybe a few thousand, 2,000, and then all of a sudden we can take those bigger pip moves. Because I like trading with a cushion. Psychologically, it gives you more opportunity cost, a lower opportunity cost. Because if I take these small risks, I can take a bigger risk later. Okay, now the volatility is coming right here. I see it happening. 1, 2, 3, 4, 5. We just had so many wicks here. So either it just bang shoots down, takes all these wicks, all these buys that came down through here. Because if you notice, none of the bodies are in the zone. Only the wicks are. It's only wicking, and going back up. So either we take the buys, all the stop losses for these buys, and we shoot down aggressively, or we just shoot up and we have a reversal pattern. Because if we do break the zone, it's going to be really aggressive. It's going to be really aggressive. A lot of people have their stop losses at this zone. So like now, if it does happen, you'll see it. We have a 5-minute close in 3 minutes. Really consolidating, really taking its time here. That's what we want. If it is gonna go up, we want it to consolidate. We want it to take its time. We want it to pick up the liquidity. We want people to notice, okay, this is consolidation. Let's take some buys and bring it up here. Or this is consolidation. Let's take some sells and take it down here. You don't want things to move up and down too quickly. It's not. You can't read it as well. Now we're gonna get our next wick down to the downside. Is it gonna continue, or is it gonna just wake up and do the same thing it was doing for the past how long? Yeah, there we go. Now let's see how aggressive it is. We're gonna have an aggressive recovery or an aggressive drop. Yo, 15-minute candle in 4 minutes. Interesting. Yeah, around here. .6 pips. Advanced protection, move stop loss to break even when gaining 2.6. Get that in there, apply. So if this moves to here, I'll move it to entry just in case I'm away. In case I need to walk the dog. Alright, pretty slow, pretty slow. Well, I'm gonna step away for a bit, set my alerts here. let's move it a bit down. When something happens, I will know. I'm just gonna wait for the 5-minute closure. A couple of seconds. I'm liking the 5-minute here. It's just a clean down. Just really gotta see how it responds over here. Okay, 5-minute closed. Closed under this range for the first time. Let's see how it responds to that. It's going to continue driving down to our trend line, which is the more probable outcome right now, because we closed under this one, where it was wicking from for a while. Because if you go to the 1 minute, now we confirm that this was. I mean, look, it's an ugly bear flag, but it's like it looks like a sock. This is a bear sock. Okay. Decent jump over there. I like this on the 2 minute. I really like it. How this here, it wick down and then comes back up and then opens green. It's like picking up orders, goes up. That's something I would like to see. If we get 2 or 3 green candles after this, I'll be very much more certain that this is gonna go up, or much higher probability that this goes up. Let's not throw the word certain around, because I take what the market gives me. I take what it gives me. We've been in this trade for 20 minutes now. Barely any movement. Yeah, if this doesn't flip in the next 30 minutes, I'm just gonna close it. It's just not worth it to sit in this and wait till it goes right, because your higher time frames might flip. Your 1 hour might come in and close here. 1 second. Your 1 hour might just close above, under this candle, open a third one, and we have a continuation, a break to down here, and then we can look for buys here, if this closes bearish. So that's why I'm saying the next 30 minutes, 20 minutes, let's just see how this is, and we might just scale out of this position, because I only want to take like the better positions. I like to classify my setup. Is it an A plus setup? Is it a B setup? Is it a C setup? D setup? And depending on what it is, I'll either cut early or enter less. This was like a C setup. That's why I entered 2 lots, nothing big. And yeah, if it was an A setup, like it did come down here initially, or like a buy over here, I would have taken more, but for now, this is what it is. 5-minute closure, 1 minute. Let's keep our eyes on that. No, the 5-minute closure just happened. No, okay. This is nice. This is nice. I'm not gonna lie. We close a big green candle. The body is above this body. I like that. So now our second objective with the 5-minute is it gonna pass this body and reverse? Because keep in mind that's this support over here, which is now resistance. Same way how this was support and it's now resistance. So if we can shoot up there and then start doing the same thing we did over here, which was consolidate, go left and right, left and right, left and right, and then start going up. So like here, left and right, left and right, left and right, and then just break up. Pretty much. That was a nice move up. Yeah. Yeah. Like, yeah, here on 320. Yeah. Yeah, but I think in the next 20 minutes it will be green. Because I still have my stop loss to entry after 2.9 pips, I think. 2.6 pips. Because we came close enough. Like here we didn't come down totally to the trend line. So if we do reverse here, see how there was 1, 2, 3 red candles? And then we had 1, 2, and as soon as the second one closed with the body high, the third one just rallied up. So we can possibly see in that same setup here, 1 candle, 2 candle, this close with the high body, and then all of a sudden the third candle starts shooting up. And if it moves fast enough, we can just take out the trade and not even wait for TP. Or just move it to break even and just keep it, you know? Alright, so I'm interested in this 5 closure in the next 2.5 minutes. Holding out nicely so far. Okay, closed. Not really what we wanted. It's not really telling me much. How it wicked up here, came back down. So now on the 1 minute, I want to see if this is gonna reverse here. This is important now. This is really important zone. So we have this movement up. We come back down to the support here, and then we continue. Trying to see if it looks like it's gonna continue here. Notice how the spread's getting higher. It was just 1.8. Usually when the spread all of a sudden becomes higher, it implies more volatility inbound. 1.7, 2, 2.3 I think. So we're gonna have some serious volatility right now. I was hoping it brings it up here. That would be lovely. Yeah, still weak, very weak. We'll see how the hour closes, and then based on that hour, we'll decide if we should buy here or cut. But I'm still very biased for a buy. Okay, how are we responding to this trend line here? See the 5. It's cleaner. Okay. I thought it was gonna be away, but no. Okay, I'm gonna enter more here. 2 more lots. There's some of those days where it just takes its time, and you have to reassure yourself that the trades take time sometimes. Just because it takes time doesn't mean it's wrong. If it is wrong, it is wrong. I will know at least here will be down like 1,000, 1,300. Because yeah, we have options now. Now, if this starts getting volatile and I don't like how the hour closes, we can close it for a break even, possibly here, you know? We have options. We have 30 minutes until this hour closes. Yeah, 30 minutes. Because if not, we'll just hedge our position and then just maintain this range. We'll see how it plays out through New York, late London. But so far, weak. But I can see a reversal happening. I can really see a reversal happening, especially on this trend line. I really like trend lines. go back to the 5-minute. Okay. Can put it aggregated and open the order here. Yeah. And if we hedge, let me enter 4 here. Just put 4. Yeah, there we go. Okay, really aggressive price action right here. We broke the trend line. Trying to see how price responds. If this is maintained, then we will hedge our position until like 2030.9, 2030, 2040. We'll look for the hedge or the sell stop around. All right.
Take time sometimes. It's because it takes time doesn't mean it's wrong. If it is wrong, it is wrong. I will know at least here will be down like 1,000, 1,300.
We can close it at break even or at a smaller loss. But that's our option now. So we have to see how this responds to this trend line. Is it gonna bounce or is it gonna
around this price here? 2032 drives down,
right,
release,
like consolidate,
and we can use that profit so that if it comes back up and it still looks weak, we can close it at break even or at a smaller loss. But that's our option now. So we have to see how this responds to this trend line. Is it gonna bounce or is it gonna break, consolidate here, left and right, like consolidate here, like this, and then go down, consolidate again, come back up, and we can close it for break even. Or our second scenario is where we are right now, so we get to find out right here. We're close to the trend line. We had this support here, which turned into resistance. We came down into this consolidation zone. We come down into this trend line. There's an opportunity for buys. We don't want to invent a trade, but an invented trade is just your mind coming up with a trade just to, oh hey, there's a trade, yeah, I see it, and then in reality there's nothing. So we do see our reasonings, and they're still very valid. Like drawdown doesn't mean wrong. Drawdown just means, hey, it's gonna take time. You know when you're wrong where you said you were wrong. When you reach the price where you said you were wrong, reaches. So if I say, hey, I'm gonna hedge here, I'll be like, okay, this long was not the best idea, but I'm gonna hedge my position. I'm gonna protect my capital. Okay, take it down here, and if not, we'll see how it responds. That's the plan for now. Pretty boring. New 5-minute closure.
A lot of red candles. Trickling down. Trickling down. Because what I like to do is build a position. I usually enter 10 lots, but do I want to enter the 10 at one go, or do I want to enter two, and get an average price? Because right now my average entry is 2033.7, which is here. So if we cross above here, I'm in profit, right? So now if I add another position here, our break-even entry will be right here, around 2030. No, it will be around here, 2033.5, and so on. So we build a position based on what we're given. We don't want to just, I mean, you want to catch a position instantly be in profit, but that's not realistic. You can't do that all the time. I like to do that, but depending on what the market gives me, I have to use what they give me. But yeah, within the next 30 minutes, we'll know, because we might just cut this position. Little loss. If we don't and it moves down aggressively, we'll see how it responds. If it looks like it wants to keep going, we'll hedge, we'll have a sell stop, and if it gets up to the middle here, we'll see our price action is. We'll just exit break even. If it just moves and looks strong like here, and we get some more moves like this, then we'll just stick to the plan. We'll take our profit here, out here, we'll have our stop losses to break even, and everybody's happy. So it's a clear bounce on this trend line. Now we want to see if this is maintained. One thing we can do now, we can think out loud and say, hey, I want to close this position at whatever, 120, and if this continues to drive down, I protected half of the position, right? Because now we're net profit, we're net 58. This one is down 106, this one is up 160. But based on how this is moving right now, I'm going to put stop loss to entry on this second position, right? Actually, you know what? I'm going to close this position right here. Okay, secure some capital. That means if this continues to go and draw down, we're still in profit. Because obviously now that we know that it bounced on this trend line, we know that this entry was better than this one. Some people would leave this entry to let it swing and close this one and move this entry to break even. But I want to secure my profits, because if this does go down, if we go to history, current month, if we go to today, right, we made ignore this because this was off stream, but we made 271. So if this were to even go back down here, I'd only be down like $50. Now that's fine, right? That's fine because of what we were given. So this is how I personally manage risk. I like to build a position, see how it responds, and manage my risk accordingly. So if I wasn't out in this position, I would have been like, okay, I don't know, but now we're still in profit, right? We're still in profit for the day. We're up 270 on the first trade, which we just closed, and now the second trade we're gonna leave to swing, because now it's technically like this position is free until it breaks under this level, and if it breaks under here, it will be down 450. I'm fine with that, because you subtract 450, 450, 350, 250, and then all of a sudden you're at 170. That's fine. I don't mind losing 170, right? On a 22k account, 21.9k account. That's fine. But that's pretty much how I would how I manage my risk in positions like these. You have to think quickly. You have to think quickly, because I did say initially, hey, I'm gonna put my stop loss at break even, but then I saw how quickly the candle moved. Because it moved so quickly, I'm like, hey, if things move up quicker, they come down even quicker. If things move down quickly, they come up even quicker. You want to fill that imbalance. Look at the movements here. Wick, 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 wick. We're moving slowly, slowly, slowly. As I was saying, it's boring. All of a sudden, you have this impulsive candle. Bang! To the upside. You're like, whoa. Now that is an imbalance. That is relative to the zone we were trading in before. That is so different. So now when the market has imbalances, it doesn't know what to do. It's like, oh, okay, now you have these really volatile moves, because I don't know if this is going to come down and keep going. Is it going to come down and go up? But what I do know is that in the possibility of an imbalance, I want to cut my position and start protecting myself. So here I took out the second position. Now we have to wait and see, hey, is it going to come down and continue to make more impulse candles to the upside to fulfill our bias of 2035 to 2040? Or is it just going to keep consolidating here and eventually break, or consolidate here and then bounce later? But for now, all I know is we protected ourselves, we secured 270, and we just have to wait and see what happens to this trade. This trade is still break even, not break even, we're still in profit $20 based on this loss. I will close this, no need to have it aggregated anymore. But that's what we're gonna do now. We're just gonna do what we did the whole time and just wait and see how it respects these levels. Is it gonna pick up liquidity again and drive price up, right? But that's the plan. That's the plan. We'll wait for 15-minute closures or hour closures. We'll see how it responds, you know? Because if we get some volume maintained like this over here, over the 1 hour, over the next 2 hours, we're gonna get some serious move to the upside, right? If we maintain this, because I like this. These three candles, it's indicative of a possible reversal, right? So now we want to see this maintain, and then when it maintains, we still have this position's stop loss to break even after it reaches 2.6 pips, which is around here. So if that hits, if it goes up there and we're stop loss to break even, let it be break even. If we lose on that trade, we secured a profit on the second trade. We protected our risk. There's so many ways to protect risk by taking profit and putting a stop loss. What I like to do is protect risk by adding a position, right? Because I entered here, and the probability for it to go up here is now, based on what we know, is we entered at this side, it wicked here, down, 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 down, down. So now we know that this zone is a down zone locally for now. So what am I thinking? I wanna see how it responds over here. I don't wanna be in a trade. I wouldn't take a buy here now if I knew what I know now, right? But we didn't know. So what do? We double down on the trade, and wait, let's see if it puts it to break even. We doubled down on the trade, we took our profits, right? So we have a little up, pick up liquidity, 1 wick, 2 wick. I would actually like to see a third wick down to see how it responds here, and then a possible drive up. I don't want to just see a big move up, because that just means it's gonna move up, put my stop loss to break even, and then wick, just get out, you know. But as I said just now, even if it does take me out, I'm fine. We secured a profit. This is how I manage my risk. Let me turn on some lights. Give me a second. Okay. Cool. This is the third wick I'm talking about. Is it gonna wick up and then keep going? I don't want to see just things move in the direction instantly. That's not healthy. We want to see healthy moves. Like, you see how this trickled down, right? We want to see the same thing, a trickle up. We don't want just a... It would be nice to take our profit if it goes up to our profit target instantly and then let it do what it wants. But in order to replicate this trade in the future, based on what we're seeing now, so we can say, oh, okay, I saw this before, I don't want it to just move impulsively, because if you have impulsive moves, you're gonna have more impulsive moves to correct the impulsive move, and now your entropy is high. There's a lot of chaos. You can't really read what's going on. So now our objective is to see how price responds to these wicks here. 1, 2, we got our third wick. Not really a wick, the body went down here, but we're trying to see how this candle responds to this. What we want to see now is a drive up and then a break of this zone, because when we do break this zone, if we do, it will be fast. It will be really volatile based on how many times we rejected here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 minutes. So since So like 45 minutes. Within the 30 minutes of those, we just rejected and rejected and rejected. So we have a pattern. Price rejects here. Now I'm expecting price to reject here once more. That's the expectation, right? That's the realistic expectation. But because we have more confluences, we have more indicators in confluence with this being tested and broken, which is this trend line, right? And we have our 1 hour closure, which is going to come up, which we're going to read. So we get to see what happened. But yeah, coming back to test the trend line, and let's see what happens. Because you don't need to cut this position at all, so we can just continue with our plan and hedge, considering we have even more profit. You know, we had 270, but if it does break, it breaks. But we'll see how it responds to this price. I like to see the candle open on the trend line, because I really like to draw my trend lines with precision, really respecting, you know, exactly that wick. I understand that it's a zone, but I like to see it respected to the dot. It gives you more confirmation that this is a trend line buyers are looking at, or traders are looking at, whether they're buying or selling or taking profit on their shorts, whatever it is. But yeah, we got that third candle down, but then it eventually broke, and now we tested this trend line. So the people have their buys here and their stop losses. It drive down, and then picked up the buy orders over here. The people who set their stop losses gave their orders to somebody else who bought them from them, and now we go back up. Or the same concept here, where people have their buys here. We have a candle, maybe we make another candle, and we break under that candle, and all of a sudden we repeat the process where we drive down. And then we have buyers over here, and then they have their stop losses under there. Do we bounce or do we break? Take the stop losses, and the next buyers are here. It's just stairs. It's just stairs. It's a stairmaster, man. You go to the gym, you bust out the stairmaster, you pull out your gold chart, man. You be pulling those. You've been doing the same thing. It's a double workout. It's a double workout. How many calories do chess players lose? How many calories do chess players burn per game? 132 an hour, man. 132 an hour. 132 an hour, man. That's great. I'm just trying to see if I did anything. No, I didn't really do anything. It's all good. Yeah. Yeah, bro. We're burning calories, man. Pull out the Stairmaster. Yes, you'll be shredded just trading. The workout, yeah, trade. What's that? Don't need to know, man. But relatively, it's weak. It's weak. Just it's weak. There's anything can tell me. It's weak. Although I have a bias and I want it to bounce on this trend line, this is weak here. This 1, 2, 3, 4, 13 wicks, however many it was. A lot of wicks, right? But what happened in a previous zone, we had a lot of wicks, like 1, 2, 3, 4, 5, 6, 7, 8, down, 9, 10, 11. Eventually, we came down, and then we just started trickling up. That's what we want to see. But now here's our volatility incoming. Big volatility, big moves. Okay, let's see our 15 minutes. What's going on over here? Okay, we broke our trend line. We broke our trend line, right? Now we want to see if it's going to retest and then drive back down. Now, based on the price action, we're going to determine if this does want to drive back down, or this is just a liquidity sweep, which is takes down, remember what we talked about, takes those buy orders,
gets them stopped out. Other bigger buyers come in, take the orders from the people who got stopped out, and then it drives back up. That's what we're trying to see now. Is that gonna happen, or is it just gonna aggressively sell off like we just aggressively sold off? I'm gonna delete this. I don't need it. We're attentive now. Pretty much. $2032.53. I'm gonna set a level there. 2032.53. Which is right here, yeah. All right. Okay, let's just look closer. Let's zoom in. What's going on? Okay, we did get a wick. Now we're trying to see if this wick is gonna continue going down, get filled, new candle open, continue going down to fill, or it's gonna create a level of support like it did over here. We had this wick and then all of a sudden we have green candles. So we have this wick and all of a sudden we have green candles. We're trying to see. Now the next time, if price comes up here, any sign of weakness, we're closing. We're out. We're getting out at a loss on this position. Net profit. But on this positions alone, we'll get out at a loss. Why? Because it just took too long. It just took too long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For me, that's a lot of wicks. That's not something I want to be involved in. I want to move on to the next trade, move on to the next session, see what it offers me, take what the day gives me. It's like trading is like fishing. You can't just expect to catch a you can't expect to catch a big fish all the time. You're going to catch some little fish. You're going to have to keep fishing. You have to be patient. Or another analogy I like to use is hunting. You got your spear, you're in like tribal type era, and you gotta wait for the time to strike. You can't just go frantic around looking for the biggest animal. You won't catch anything. You gotta wait, be patient, right? Take what it gives you. And then one day, you get a big fish. But most importantly, you built the habits to get that big fish. But yeah. One thing I love seeing trading streamers do is when they're talking to their stream and at the same time price is moving and you see them slow down when they speak. It's like, yeah, I know what you're thinking about. I know what you're saying, man. You're looking at the chart, but you're trying to formulate thought, aren't you? Huh? I just had one of those moments. I'm gonna have to get used to this. What's happening? Okay, it's on my level that I put down. Because yeah, if this continues to be weak, this is what we're gonna do. This is exactly the plan. Okay. If this continues to show weakness, where is my sell here? It will count as a sell stop if I put it here? Yes, it does. Okay. We will take an order around here. How much loss is that? It's like 1,500. No, 1,200. Great. And then, yes, this streaming is really making it slow. And we'll take it down over here. Around here. 2,600 profit for that. And we will release this. Look for buys here. I drive up to the middle. And then close break even, or we just leave it and rise back up and we're all happy. But for now, this is what we're looking at. Let us, I'm gonna manually enter this, or I'll just add the sell stop if later in the session, if we're still in the same situation. But for now, it's I'm patient. Let price do whatever it wants to do. I will read it, I'll analyze it, So yeah. Pretty much. Yeah, I'll write this up here. One win. And then if we close this, we'll add that loss. If we win it, we'll add the second win. Should I count it as one position? Yeah, it's an individual trade. It's an individual trade. Yeah, super aggressive selling after this trend line break. Because if this does break and continue, this is how I'll measure it. This is how I'll measure it. I'll take a trend line. I'll take it to the bottom. Right here. And I'll take that same distance. And I'll apply it like this. That's 22.31. And that's exactly at this whoa, what happened here? So 2031. And that's exactly, to go to the 1 hour, we'll see it. At this consolidation zone, you know? This. So we have to see where it's going to start bouncing from, if it does bounce there. Pretty much. That's our little local analysis, or our midterm analysis, should I say. But yeah, take this out. Let us write something. Take profit on hedge shorts here. Okay. Let's just put a little. Okay, cool. Now we get to go back to these time frames, these lower ones, seeing how price is responding. Because once again, we can do the same thing we did here. We broke up and then we went down. It was a fake out. We broke down and then we go up. Possible fake out. These are scenarios we have to understand. The next scenario is it breaks here, we look for hedges. It breaks here, we look for hedges. I'm looking maybe most likely under this level because I just want to let the trade swing. I come to understanding and I come to recognize that the market is a wave. It's going to oscillate. I'm gonna let it breathe. I'm not just gonna. My trade has to be right over here. It has to be right as soon as I enter. Nah, that's not always the case. It's not about getting it right. It's about adapting to what's happening. You know. Pretty much. I have this support. That's why I put this line here. We have this support, this support. This is our last consolidation range before we broke out to this range. So maybe we consolidate here and then break out. Maybe we come down, just bounce, and we break out. Which is what we were hoping is the same thing as the fake out, where it breaks out of the trend line aggressively, comes back down even more aggressive, breaks down aggressively, and hoping it comes back up with even more aggression. Give me that, give me that, ooh. Where is the juice in this trade, man? Come on. I know there's juice in this trade. I know there is.
It's just in a heavy downtrend, but when is the volume coming in? When is the volume coming in? And when it does, is it gonna bring it to our side? Are you with us or against us? We got a 15-minute closure. Let's see how that did. Okay, 15 minutes. Okay, interesting. See how the body, how a wick down here and the body closed at the trend line? I like that. I like that. Because now we can get the same possibility as like a wick here. The body closed, or no, that's not a good idea. Like a wick here. And then it continues, you know? A wick here. This is like a local bottom, and then it just continues. I like that wick, and I like how the body closed in the same range as the bottom of these bodies. So here, 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 and then we'll see how this one closes. But if you want to put a line through the candles here, bottom of the body, this bottom, bottom, and then, yeah, so it's building a new consolidation range. We can say that. Now, is the market going to respect it? Consolidation doesn't mean it's going to go our way. It means that there's a possible outcome that buyers can come in within consolidation and create some buying pressure. Because if anything, we can come up here, you know, if I can see this trend line like this, you know, we can come up here and just cut the trade once it looks weak. Like it just wicked up. If it just keeps going down, we'll cut it right here. Like it goes up, wicks from here, we'll cut it. Okay. But even if I do cut this trade, I just know I'm gonna wake up or check the chart later. It's gonna be here. And I will never say, oh, I should have done that. I'm not that type of person. But damn, I should have done that. Nah. Adapt to the market. Take what it gives you. If this is, bruh, see, trader, come on, man. If this is what it gives me, this is what it gives me. I don't make the choice, but I adapt to what they give me. Still very, very weak. Very weak. We're gonna get a continuation like this, where we go like this, we're waving up, and we go down deeper, we go up, we go down deeper, we go up, we go down deeper. Or is this gonna be the change in pattern, where we go up, we go down deeper, we go up, we go down deeper, we go up, we go down deeper, we go up. You expect it to go down now because it's in confluence with our trend line here, but the buyers come in here and we keep going up. For me, that's a break of pattern, and then we have to test it up here, which is why I said if it does come up here and look weak, I'm just going to take it up, even if it's at a loss, because we are at a net profit if we do. Right now, we are at a net profit. Exactly now. We're at break even, my bad. Right? And if we keep driving up, man, we can find some nice exit and just call it a session, you know. I don't like to trade the whole session. I like to take what the market gives me and just get out. Get out. Nice little move up. We can get a move up to 2033.68, which is our next 0.68, which is here, which is these wicks. Let's see how price responds to there. Is it gonna reject or is it going to break? This is definitely a boring day. Okay, let's keep focused now. aggressive impulse candle, but it went up very quickly. Is it looking weak? Still don't see any movement in the candles. Let's see 1 minute. No, nothing. We still want to see it get up to this level here. No rejections whatsoever so far. 15-minute closure in 9 minutes. 5-minute closure. 4, we just got a new 5. See how that candle was just wicking down. See how bullish this closed? Now we want to see that third candle be the front line, you know, because if this closes bullish like this, we're gonna get some 1, 2, 3, get some serious upside. I would love for this to go to profit now and just put stop loss to break even and just walk away. Bye. Khalas. Thank you. But now my emotions are playing with me. Do I keep it? Do I not? Now because I'm saying that, I'm gonna cut my losses as soon as we get the next week. 60, 39, 42. Yalla, come on, wick me up to the range. This range here. If we wick up to this range, I'll just close it. Come on. Let's see some bank, some upside action, some MBC Max type beat. Yalla. It's sitting here too much. Listen, very bullish, but I just don't like the price action. I'm still firm on my bias. Rise and fill to 2035, 2040. Today, profit 329. Not much, but we're building the cushion. I do like it. 210 on the live stream. But yeah, pretty much I'm just gonna sit and wait and look. 15-minute is absolutely looking fire for a close. Looking beautiful for a close. If we have 7 minutes until this close. Oh, that was our break even right there. If we close here, oh man, easy drive to 2036. And then from there we do the same thing that we did here. It's gonna bounce, it's gonna reject, build our levels, look at consolidation, look at price action, look at the wicks like this. So you see this wick went up and then started making candles down, 3 candles down, 1, 2, 3, and a little trickle down. We want to see that same thing, 1, 2, 3, and then a little trickle up. Basically. But yeah, we're net on the day. Nothing really exciting. It is two lots, so 4 lots total. I usually go 10. If we did take 10, I like to estimate how much would have been. So if we did take 10 over here, you know, 1,700. That's decent. That's 10%, almost 10% of the account. It's decent. But for now, we're building our cushion. Throughout this week and next week, I think I'll be at 23 this week, by end of this week. If not, by next week, then we can start taking higher lot trades. But pretty much for today, we closed our position at net profit. If you took the buy here and you followed up with the risk management, that's why it's super important to understand there are many ways, diverse ways you can manage your risk. Like now, imagine I was just stuck in that one position. I would just be in break even now, or I would just be in profit right now, a tiny bit of profit. But what did we decide to do? We decided to scale into our position. Now, if this was a winning position and I didn't close this, and this closed above here, I would have added to it also. So now I built a position. I realized, hey, I can build a position and have more exposure with a better price, where if it does move in my favor, I can take profit, I can move my stop loss to entry on the different positions and manage my risks in order to lose less or to make more. So that's what's beautiful about stacking up your positions and really building an entry and building a position. But pretty much our bias to 2035, 2040 is still in play. I'm looking for a 15-minute closure above 2034, which is the level we are at now. We broke out of this range here. We broke out of this range. We had this wick. I like to see it on the 15-minute. This big wick to take out. So think of it as there were so many buyers at this trend line. So many buyers. Oh, honey, please set me a buy limit at 2033. Okay, honey, I'll do. It's too easy. Trading shouldn't be easy, especially when we're coming into times of high volume, which is London session, New York session. So we open up London session here, or here, whatever, and we have this trend line. 1, 2, 3, 4. Oh, honey, put the buy here and put a stop loss right under the trend line. It's very easy. We'll just put our buy and we'll take it up. It shouldn't be that easy. It is a pattern, but now how are market makers going to influence the pattern moving? So this is what we think of now, is that, yeah, we broke down, but we had this big wick down. It hit all their stop losses. They give their orders to people with more money, the smart money, and now we drive up. So now the guy's sitting there, he's looking at his wife, and he's like, oh man, you're not putting on the red panties today. We didn't have a good day. So now what happens? His stop loss gets hit, it drives without him, right? So this is how you're supposed to think. How would a market maker think? How would a big hedge fund think? There isn't enough liquidity at this trend line. There isn't enough liquidity at this trend line. So what do? I let the stops go out, let the people get stopped down, and let them give me their order. And then we start driving up. That's how I start thinking, you know? So that, oh, if we broke out of this range, it's a buy, but then it comes back down, hits their stop losses, then starts going up. Same concept. Now that's what we're looking at. Pretty much. Absolutely huge bullish move. 5-minute closure above the zone where we entered that. This is exactly what we would have wanted to see. If we kept our position, we would have 100% been moving our position to break even right here. Why? Because after all of this, we had our 5-minute closure and now we have a continue to drive up, right? Personally, although I was less inclined to trade, and I did take a smaller size trade, to stay and wait and look for more buys up here, I don't like it. This is a C plus setup for me. There are some trades you can take, but are they the trades where I say, hey guys, I'm gonna enter 10 lots and we're gonna make some big quick money, right? And we're gonna get out. It's not one of those. Why? It's just we're sitting in between the range. I started the stream, man, look at these moves. I started the stream and we're in between here and here. I don't want to take a trade in between, because then if you're here and you took the trade, you're like, oh, is it going to keep going down? Is it going to keep going up? Because if I manage my risk here and I hedge, it's a bit complicated to manage the risk in between these two large zones, right? But absolutely beautiful. This is what I was talking about. These candles, bang, bang, bang. It just trickles down. We break, pick up the liquidity onto the zone. Here was a good place to add to the buys, where we previously entered consolidation. But pretty much, guys, that's me for now. I will possibly update the live, re-live on New York session, come back, possibly find some trades, maybe keep it on gold, maybe move to S&P, but mainly this account is S&P, Nasdaq, and gold. So that's what we're sticking to. Beautiful trading ideas today. Our bias did work out, but one thing I would say is, what would I do better? What would I do better? Is that, you know what? Now that I think about it, maybe I just should have said, you know, I was at a how much loss here? I was at like 50 loss, I think. How much was it? $60 loss. Maybe I should have said, you know what? It's okay, I made 270. Let me put my stop loss so that if I lose 270, it's fine. If it comes back down here, I'm break even. I didn't lose anything. I didn't make anything. No problem. And let the rest ride, you know? Because here we would have been up 300. This was, I think, our initial take profit, right? So pretty much that's what I would have done. What I would have done different. But yeah, now we're getting the volume coming. Now we're getting the movement. As soon as he exited. But yeah, happy trading. Beautiful London session. Nice little quick analysis. Nice little... however long this was to record this, but yeah, lovely. I will possibly be back in New York session, and we're gonna come back and kill it. Small fish until you get a big fish. Smulla trades.